All right, guys, what is going on? What is good? What is good, man? Give me just a second here. Just a second and we'll get started. All right. What's Gucci? What is good? What is good, man? Thank you, Willow, for liking the stream. Drop a like on the stream if you guys are ready to go, if you're ready to learn something today. If you're ready to review what has taken place. If you're ready to, learn good entries, learn good directional bias. We've been focused on directional bias a lot. Well, since forever. But especially the last couple weeks. Yesterday I shared on Instagram, my Instagram story, all right, saying to trade in the direction of opposing liquidity, right? So based on that idea, what do you think is going to happen? What do you think is likely to happen for ES here in just a minute? Any guesses? Do we have any guesses in the chat? Wow, Mason. I want to get to that in just a second too, but let's watch this together. Okay. That might have been a little loud. That may have been a little loud. Did you guys hear that? What did we just do? What did we just do? Give it just a second here. Look at that. Look at that. I want to give this just a minute while we're here in the first 10 minutes or so. Right? Ooh, that's a good fucking point. What time is it, baby? What time is it? Give it a second. Right. You guys are so fucking smart.
Order filled.
Oh, you guys fucking hear that shit? You guys see it? Order filled. Biatch. TP. All right. I can turn my music on now. TP Wednesdays, baby boy. 6296 is what I was waiting for. 6296 is what I was waiting for. That 96. Boom. Let's go. Too easy, chat. It's too easy. All right. Now we can do the introduction. Right? There's no macro. Right? There's no macro. Sure. Macros don't exist. Algorithms don't exist. 1210. to 1150, or well, technically it's 1150 to 1210, but that's just so happened when TP hit. Really? You're right, John. There's no algorithm that runs for stops. Never that. That's bullshit. But all the Twitter guys, it's buying and it's selling pressure. You believe whatever you want. Whatever it is, though, I'm gonna hit TP, baby. All right, let me do my intro now. I'm just bullshitting. What's good? Willow, Mason, 2020, Jorks, Daniel, Ram, Felix, Jonas, Scott, Bonnie, Roger, Torty, Gabriel, Julius. Ooh, I am lost in the sauce now. Iberneth, Edgar, Edward, Alex C, Oscar, Crystal. Yeah. I had not traded a lot this week. I kind of went in today like, all right, I need to do something. And then ES Blessed was like, here's some equal highs for you, John. Bet. I'm coming for that. But we got to let the magic work. You know what I mean? We got to let the magic work. And that's what I did. So now I'll be honest, the entry was not superstar. Okay. It was not superstar. But as I keep saying, yes, good entries, it can mean more profit. Sure. It can mean better RR. I would never say otherwise. That's just the truth. However, for a lot of younger traders, beginners, maybe some intermediate level traders, one of the easiest things to do to take a winning trade, right? The highest probability trades are going to be what? Runs to opposing liquidity. Now, what have I told you about runs to opposing liquidity? What sort of concepts are we looking for? When we're trading in the direction of opposing liquidity, a buy model, which is a buy program, or a sell model in a sell program, we can use concepts, right? What kind of concepts? This is where, if you're not taking notes, you're going to miss out. I know I keep saying that a lot. It's all I ever do is repeat myself, right? So while you guys are answering that, let me put this out here real quick. Like I shared on my Instagram the other day, I did finish The Inner Game of Tennis by Timothy Galloway, or W. Timothy Galloway. It was pretty good. I give it like 3 stars out of 5. I give it 3 out of 5. I'm not going to read this one again. I did take good notes on it, but it is about tennis. There are some chapters that are highly technical when it comes to tennis, which I don't give a flying shit about. So that to me was kind of a drag. One of the chapters, I skipped a few pages. Okay, but the rest of it, there's some pretty good stuff in there on relaxed concentration and knowing how to not try too hard and stuff like that. I think that's worth it. I think it's a book you should get. It's not going to be in my top 10. It's not even in my top 20. Okay, if the house was burning down, I had to get out of here. This one's getting burnt. Okay, I'm not grabbing that one on the way out. Okay, and then also some of you over the last few months have picked up Tom Hugard's Best Loser Wins, and I feel like you guys like it, you share it, and it's like, okay, well, shit. If you know my students are getting it, if the internet is saying that it's pretty good, all right, I'll give it a try. No big deal. And so I picked that up the same day I got my Kindle as well. So, yes. Best Loser Wins by Tom Hugard. I'm going to dive into this one, I don't know, probably next week or so. I don't know. I got to stop buying books, chat. I fucking buy too many. But what type of concepts are we looking for? Are we looking for, like, let's say normal concepts, or are we looking for inversions? You tell me, chat. Right? or maybe a mix of both. Some of the best entries you can take are going to be inversions, okay? What was once bearish will become bullish. What was utilized in a sell program will quite literally flip. And now, if it's in a buy program, will be utilized for longs. I've taught you this. You know this. I go over it a lot because I do know that we have people that want to learn through repetition, and I know we have beginners and new people on the stream as well. I want to make sure that you guys get value too. But yes, Roger, or sorry, let me back up. I've had a lot of caffeine today, so I'm fucking wired, baby. And we just got TP, so I'm fucking super hype right now. And I can't stop, baby. I can't stop. I used that philosophy this morning. Baby Pips had me miss my entry, but I stayed composed and found a safe place to hop on. Well, yeah, safe is rather, again, not the right word. That's why I don't use it, but as close to safe as possible. I get what you're saying. But words do matter. To hop on before the train rolled out and bagged up again. See, Willow, that's my point. That right there is my point. You can miss the early entry. You can miss the lower entries. You can get in a little bit later. The caboose, okay? The caboose is the back of the train, but guess what? You're still going to get there. You know what I mean? You're still going to get there. So that's a very good example of applying the things that I do and the things that I teach. That's a wonderful job. Wonderful job. So yeah, Jonas, wonderful. What manipulates typically mitigates. That's perfect. We're going to take a look at that too. Well, I mean, I showed you some of the markups already, but I wanted you to look at the chart without any sort of markups on it, so you can kind of, because I'm not going to mark up everything, but I want you to look at like, okay, well, what was utilized for shorts? What was utilized for longs? You know, do we have any intermediate term highs? Do we have intermediate term lows? You know, do we have an inversion? Do we have a, you know, whatever you look for, right? That's what you should be doing while I'm talking to you, while I'm yapping to you. Okay. So Roger says original consolidation, manipulation, low risk buy. Your entry was on the second leg of accumulation. Right, Roger. Fuck, you might as well just trade for me. You might as well just take trades for me, Roger, since you know it so well. You know what I'm saying? It's that, I mean, I'm not going to give you any of my accounts, but I would not feel bad if you guys learned exactly how I do things and then went and did that. I would trust you with, you know, like if I was looking for people to trade my money, I would trust that. You know what I mean? It's that simple, Roger. It really is. Daniel says, looking for a trading range, find the manipulation, look for the mitigation. If you miss the first leg, get on the second one. See, you guys do pay attention. You guys do listen to my yap. Look for equal highs if possible. I'd love to see that. A place that still fits my tolerance for the day instead. It's an entry that you're comfortable with the risk, right? You're confident that it is more likely to go where you want it to go, and it's not going to go where you don't want it to go. And that's the main point I'm trying to teach you, I'm trying to show you today is inversions. You should be paying attention to some inverted concepts here. Okay? That's my point. So start looking. Start looking. Do we have an imbalance? Was that utilized for shorts? Yep. Okay, we got this run higher. We trade lower. We did leave an imbalance here. Okay. Then we ran lower, ran higher, short-term lows, swept to go higher. Okay. Low, high, lower, low, higher, high. So what should we be paying attention to now? Remember what I told you about the manipulation leg. Remember the mitigation leg? Or sorry, this is the mitigation leg. This is the manipulation leg. Sorry, just to clarify. From the high down to the low, right? In the manipulation leg, anything that's in there is permissible. The lowest one, if you can get it. The highest one, if it makes sense. Okay, Oscar. Very nice. I did catch the sell model before the buy. Hey, that's fine too. Okay. I'm not going to knock a winning trade. You know? Now, I may kind of say, hey, well, you know, if you caught, let's just say easy, 5 points going lower, but there was 20 points offered higher, I probably will say something like that, because you're not getting all the juice and you're getting only a little bit of juice, and that's counter efficient or inefficient, whatever the word is. Okay. So remember, let's come back. The manipulation leg, right? Because we have London's low. That's right. Well, actually, London's low is way over here. Okay. We kind of tap London's low here a little bit, no problem. On this run, it's a sweep rather, but it's a run below London's low. It's a sweep of July 7th's low, if that makes sense. Okay. A run is where it continues going. A sweep is where it like sweeps liquidity and then trades at the opposite direction. Okay. In the manipulation leg, any concept that is in here that is within that range is permissible. It's permissible to trade. Okay. So yes, from that high, I'll make it, I don't know, let's just say green. Okay. So this range in here is permissible for entries. Okay. Whether it be a gap, whether it be an inversion here, whether it be something up here. Okay. Now, ES 1 minute time frame, it looks a little bit blocky. I get it. It's not that big of a deal. That was worse. What is right here? Especially right here. These candles don't have any shirts on. Right? When a candle has no wick and ain't got no pants on. Right? When candles don't have tops, their top is off. You know what I mean? Like a Corvette. I had to throw that in there. I'm sorry. Buy a brand new sports car, you got to talk about it, right? There's an imbalance right there. Okay? That's an imbalance right there. Now, does price trade into it to go lower? No. Not until here. Right there. See that? See that? It does trade into it here. It doesn't really do anything. It just kind of stays in that 5-point range. Makes a slightly higher high. And then those lows right there, it comes down for. These lows right here, buying below that is permissible. Trying to get this imbalance, that's permissible. Anything down here, if you can get down there at that time, yeah. At this particular point, though, since we've already ran July 7th's low and London's low, it may not want to trade back down here again. It could. It may not. All right. Remember, these lows, buying below that low, is still what? It's inside of the mitigation. Not only that, remember what I taught yesterday, right? Pull your fucking notes up, right? Take your notebook out, look at whatever the fuck you wrote yesterday, and remember what we went over. Oh yeah, well, when there's a mitigation or any other concept, every concept has a premium, which is the upper half, and it has a discount, which is the lower half. Right. If you can frame trades in the lower half, need not trade higher first. Okay? You don't need to break a structure. You don't need, you know, a higher high up here. You do not need that. I know that's what a lot of people teach, and it's not a good habit to have. Okay? Personally, it's not a good habit. It's, I don't want to say elementary, but it, again, break a structure is the most overrated concept. Okay? And you wonder why a lot of people who talk about break a structure, you know, they don't do as well as they could. I'll just put it to you that way. Upper half is premium, lower half is discount. So that run right here, that run below those lows, or sweep rather, that's, you can long that. You can long that. Now I'm going to ask you another question, because I love asking questions. You guys ask questions. I ask questions. We're all philosophers, right? When you're looking at a concept to enter on, right? And I taught you in the video, oh shit, I forgot what it's called. It's like the secret to the imbalance, or I bet you didn't know this about imbalances, or how to pick the right imbalance. Something related to imbalances. One of you left a comment on it yesterday, and then I went to rewatch it, and I remember, I'm like, oh, this is a fucking awesome video. I don't know how I forgot about it. But I taught you to look at imbalances. Like, let's say in this example, an imbalance on the way up. I taught you to expect if it's going to stay in the upper half, or if it's going to go to halfway, or if it's going to go all the way to the bottom end. Right? So what was the answer to that? Well, you don't have to answer that, but answer this. If we have a mitigation, how far can price trade into the mitigation? Think about what we've already done. Think about what price has already done. It took those lows here, traded through that. So if this is a mitigation, right? How far at 62.74 down to 62.59, right? A little bit of a higher range on a 1 minute mitigation. No fear. No fear. Right? How to trade without fear. That video comes out tomorrow, by the way. Right, Mason. Good, very good point. Already did business in the bottom half. Okay. So how far should it go into it? Chris, it can go down to the bottom, but it's already done that. It can go as far as the inversion. Oof. Look at that. Look at the fucking precision on that. Right into it. Right there. 2 ticks. Or it met it and then 1 tick into it. See ya. Or that low was taken here and you have a 1, 2, 3 formation as well. Yeah, Willow. That's fucking nasty, isn't it? Sorry, I know I cuss a lot. I'm sorry. But when you get good at trading and you start having fun, especially if you start making money, bro, you're going to be... Your ego will be tested, I promise. Okay? I promise you. When you fucking get out at the high of the week to the very tick, bro, your ego is going to be like, yo, you got to tell everybody. You got to let everybody know. You know what I mean? That's a good point, Jonas. I know I say that a lot too. If price is bullish, if it's really, really strong, it's not going to give deep retracements. Correct. Is that a deep retracement? Not really. If you base the retracement from this low up to that high, that's not a very deep retracement. That's about 25%, maybe 30%. I mean, I don't know. Right? 25, 30 maybe, right? You're just kind of eyeballing it. Not a big deal. That's a pretty shallow retracement, right? But that's the discount end of the premium. The discount end of the premium. What the fuck are you talking about? From the terminus of the buy model, aka the low resistant highs up here, down to 50%, that is the upper half, right? So that is a premium. Okay. This premium has its own upper half, which is the premium of the premium. Right? Typically, you don't want to buy here. You can. I don't usually suggest that. Okay? But the lower half is the discount end. And that inversion just so happens to be right there. But price isn't coded to do certain things. It's not. It's not coded to give smart money a chance to exit shorts in here and then hop on longs here or even here to go higher. I told you about this yesterday. I told you about it last month, last week, last fucking year. I talk about this all the time. The function of a mitigation. Right. So, I mean, what else do you want to know, bro? Look how beautiful today is. We left behind clean highs, ripped everyone a new one. We took London's low. We got a very shallow retracement. That's not a very strong market to me. There's nothing in there that really would scream buy to me personally. So we do continue one more time. Again, Monday, July 7th, that low. Then once we take that, okay, now we have an opportunity to long or to wait for a retracement. TP on stream, right? You heard the lady. I thought it was a dude, but I had turned it off and then turned it back on. So there's a lady this time. Y'all did hear that, right? Or am I tripping? Because I had the computer sound on. You should have heard it. A simple yes or no, chat. Were y'all able to hear that? Okay, thank you, Felix. I thought so. Gabriel, my entry was not that great. Okay. It was basically the mitigation. It is basically that. So it wasn't a super high RR trade, but like I said, it's not always about high RR. It's about, yeah, the order filled. Yeah, okay, thanks, guys. It's about getting in sync with price delivery. If I'm not in front of the charts at the prime opportunities and I see the opportunities later, or maybe I see like the opportunity after, like say around 11 o'clock, and it's like, oh, well, shit, I missed buying below old lows. I missed like this. It's not a soup, but I missed the manipulation. Okay, well, the mitigation's like one of the last opportunities I have. So I did get in slightly early, and I knew that inversion was there, so I was not panicking when the market traded into it. I said it shouldn't trade beyond it. It shouldn't. Did it ever go beyond that? No. It kissed it, left it, made one more pass lower, and then launched for the highs. So I'm not saying you got to buy that low or any of these. I mean, inside the range is it ain't perfect, but it'll work. Okay. Now watch this. And again, I don't think this is the best opportunity. I don't think it's the greatest there is, but if you see this, right? Low, high, lower low, and then the higher high. And we have what? Another mitigation here. Now it does trade outside of that. It does. We have a small gap at the low end of it. It does overshoot that some, but it doesn't get to that low. And then rallies. So anything in this manipulation leg, lower here, that to me is also permissible. So that down candle could be part of it. That down candle could be part of it. That gap could be part of it. Yeah, I mean, the 1 minute, this doesn't have anything crazy in it, but that's all permissible too. It's the same rule. The same rule still applies, even up there. The rejection block. So to be honest, I don't really use those. I think I know what you're referring to, though. I think you're referring to this. Right? Are you referring to that? Like that 50%? Or are you referring to something different? Okay. I mean, the reason I don't use those is it's just too, I just don't trust it. You know what I mean? Like, I know it's there. I know they exist. I just don't use them. I just don't. I used them many, many years ago, like on a higher time frame, but I never really found them to be very useful. I mean, if you use it and you do well, don't stop. You know what I mean? But me personally, it's just not something that I pay attention to. But I do pay attention to everything else, though, especially liquidity. Liquidity's arguably the #1 thing. It's like, well, that's where the market's going. Okay, well, where has it been? Where we are now? Where's it going, right? So one thing, too, that I wanted to show you guys as well is as kind of a follow-up. How'd we make these lows here? If we took everything off, how'd we make those lows? We have a low, we have a lower low, and then we have a higher low, right? So what is that? Intermediate term low. So if we have a mitigation and an inversion and an intermediate term low with, honestly, I can't tell if these are equal highs or low resistant highs. Those are okay. Those are equal. Arguably the greatest price target. Unless there's 3. If there's 3 identical, that hardly happens. But when that does, I mean, you have my permission to put on full risk and size up. You can size up with equal highs too, but just, you need experience, okay? Trust your journal. And yeah, Edgar, the manipulation was down here, right? Let's actually, you bring up a good point. Let's do this together. Let's go back. Monday, July 7th. Okay. That's that low. And that's why I had it written out like that. 62.46 and a quarter. Ooh, that's a good point too. Now that you mention it. 62.46.25. What is 46 minus 5? That's got to be 41, right? 6 minus 5 is 1. Quick math. Look at that. Look at that. 246.25, right? Minus 5, 10, and 15. How far can price go below an old low? If you don't have an imbalance or whatever. I told you, I've said this for years. People on the internet argue with me too about this all the time. Because they don't know shit. But I'm like, yeah, the S&P typically sweeps 5, 10, 15, sometimes 20 points. And then guess what? That old low minus 5 puts you right there. I know the precision's fucking immaculate, right? It ain't me. It's just how the market's designed. I didn't design it. I didn't code it. Nope. But anyway, the point is, this is the manipulation portion, in my opinion. Or if you want to include that and London's low, I wouldn't fault you for that. Okay, I wouldn't fault you for that. There is your original consolidation, which we did trade back into, which is, that's, I would note that. But there it is right there. Okay. Original consolidation, we traded lower. This right here was distribution, right? So what was the fucking video in the Market Maker Models Masterclass? Distribution becomes accumulation, right? So I'd say that right there is your distribution. I know it's kind of a wide range, but do what you want with that information. Manipulation. I'd say this right here. And again, this is just my interpretation. You can argue with your mama. I don't really care. I think that would be the low risk buy. Manipulation, we get back above it, and then this candle trades down and below that level one more time. So I wasn't in front of the charts. I probably wouldn't even trade that. But to know that that is there is pretty good, because that was the opportunity like right before the move, right? Either that one or this candle here. So either one of those, I'd say, to me, was the low risk buy. Okay. Then we have a consolidation, right? Right here. So that to me is like first stage accumulation. That run here, first leg higher. And then for all the reasons I've already explained, distribution becomes accumulation. So this here, that fucking fly is still in here, dude. I don't know how to get, there's like one fly I've had in here for fucking forever. It's like my pet at this fucking point. That is the second stage. That's the second leg. Right? Original consolidation, distribution, manipulation, low risk buy, first accumulation, second stage. Where are the best trades? Well, in today's case, we did have some speed in the first leg, but the second leg still had some speed, especially here, right? And then tagged the highs. It tagged terminus in the 12 o'clock macro. Time, price, context. That's the law of high probability trading. Okay, 12:10 and 11:50. Right? But there's no algorithm. So that right there is your market maker buy model. And it's not every concept. It's not every, you know, I'm not marking up this imbalance here, or, you know, this short-term run. You know, I'm not marking up everything, but it's good shit still. So Daniel asked a good question. What is the 12 o'clock macro? So just to make, because we got like 72 people on here, just to make sure everybody knows. Okay. And again, this is not something that I made up. I didn't make this up. Macros are every hour. It's the last 10 minutes and the first 10 minutes of every hour. Okay. So that's real easy. So the 12 o'clock macro, okay, like let's just make this a different color so we can differentiate here. 12 o'clock, the prior 10 minutes goes to 11:50. 10 minutes after that goes to 12:10. Does that make sense? That is the 12 o'clock macro. But that is also everywhere else too. Let me see if I can do this. Oh shit, I can't. Well, I thought we used to have an indicator to do this, and I don't remember what happened to it. I think TradingView is just trolling me. There's your 11 o'clock one, which is 10:50 to 11:10. Then same thing here at 10, 9:50 to 10:10. And we're pretty much coming up on another one as well, the 1 o'clock one. Which is right here. 12:50 to 1:10. Okay. Now, I would argue that the 9 o'clock macro, I pay more attention to the window of 8:30 to 9, because 8:30 to 9 is your equities open. That's your first 30 minutes. So I don't consider that a macro, but I do consider that opening range. Okay, so whatever the highest high is and the lowest low in the first 30 minutes. Okay, 8:30, I think is that right here. So I forget what lines we use for this. There's so many markups. I forget what color we assign to what. But anyway, so in theory, based on levels of liquidity, we should trade above 63.02. We should do that to take equities open high from this morning. So the same way that I taught you the other day that when we looked at NQ, I'm like, this isn't bearish. What's going to stop it from trading lower? It's probably not going to do that. And then what happened? It fizzled out into the close, like I kind of hinted that it may do that. And in the after hours, ripped everyone a new one trading higher, right? And everyone's like, oh my God, what happened? What happened? It did what I told you it would fucking do. Remember that? What's stopping price here to then run it lower? There's nothing stopping it. So to me, it could trade up there. Am I holding for that? Nope. I'm out already. Hell, I played you the damn order filled thing on the Top Step X shit. Because all I did was pick 62.95, which is the equal highs, and I added 1 point, which is 62.96. That's all I needed. You're more than welcome to rewatch the stream at, 8 minutes into it, 7-8 minutes into it. When it hits that, you'll hear order filled. I'm not holding for up here. I didn't plan on it. This is not what I wanted to do. I just wanted to get my bread, and that's it. Okay. But every hour has a macro. 2 to 3 o'clock's a little bit different. The 3 o'clock macro, the first half, so 2:50 to 3, is different. It's still a macro time, technically. 2:50 to 3, the last 10 minutes of the day, that is called MOC. That is market on close. That also has its own price delivery mechanism. You'll see big movements up or down, and sometimes consolidations, yes, but you'll see price runs in the last 10 minutes too. You can Google that. You can look it up. You can literally go into Google or ChatGPT and ask, what is, like, I guess, equities or futures trading MOC, market on close. That's a real thing. Okay. Some of this other stuff, it might be a little bit subjective as far as like context, especially, but that's what I try to teach, right? Why should price trade up here? Liquidity. Is it bearish? That doesn't look bearish. Would you short this right now? I wouldn't. So where is it likely to go? Up here. Right? It's literally that simple. So what other questions you guys got now that we're coming up to the end of the stream? What else you got? This stuff really isn't hard, folks. It's not hard. It really isn't. If you looked at a 5-minute time frame, which is where I started today, it's real easy to see the mitigation. Low, high, lower, low. That up candle right there. And this imbalance overlaps. That's my mitigation model. Do we have a high probability target? Yep. Do we have an imbalance that overlaps with a mitigation? Yep. That's my mitigation model. You may not have even seen the market maker buy model, but if you saw the mitigation model, it would have put you in the same way. Easy. Oh, you know what? I did see that question a minute ago. Do I prefer ES over NQ? No. It really just depends. If it's a large range day and if you're confident and you want to make a fuck ton of money, yeah, trade NQ or MNQ. If you're not really sure, if you want to reduce risk, if you want to trade a little bit lightly, go to ES or like micro ES. So it really just depends. If I'm going to trade the leader, it depends on which one's doing that. Or if I'm going to short the laggard, it depends on which one's doing that. I would say most of the time, I trade the asset that has the more favorable target. If that makes sense. And yeah, Oscar, that's what you heard earlier. Yeah, SMT, divergence, relative strength, it's all the same shit. That's also what you saw here on ES, right here. That higher low here on ES was seen with a lower low on Dow Jones. And Dow Jones doesn't have equal highs, but it does have low resistant highs. And then that candle with no shirt on it. Right? So that little run right here to go higher, that's also what prompted me to hold this for the highs. And that's why, and again, it's not to show off, but that's why I turned the volume on, because I'm like, okay, TP's fixing to hit. Let's have some fun. You know? What type of mentor would I be if I didn't take trades, right? Especially if it's going to a high probability target and if it's doing things I told you it would. I told you yesterday on Instagram. So that way everybody knows it's not a fucking secret. Trade in the direction of opposing liquidity. And that's just easy winning. And then I come out here and do it. Told you about it yesterday. Went and did it today. It's not hard. It's so easy. Okay? It's probably hard because a lot of us, we get into trading and we learn bad information. We're coming in with our bad habits, with our fucked up mindset. And all the filth and personal problems that you have, that goes into your trading too. So you have to simultaneously learn from your mistakes, but also learn how the markets actually work and put away the things that you thought worked. So the ego is involved as well. So there's a lot of stuff that you got to fix. You got to become humble. You know, dude. What's that shit called? I made it the other day. The keys to elite performance. That's why I made that video. And the very first thing was you got to humble yourself. You got to be coachable. You got to be willing to learn. There are people out there that are smarter than you. The same way there's people out there that are smarter than me too. There's plenty of people smarter than me, bro. I bought Tom Hugard's book because you guys say that it's good. And Tom Hugard trades with more money than I do. So I'm going to learn from him too. Even though I already know how to do a bunch of cool shit, right? I'm still willing to learn though. You know what I mean? So Scott said, stop talking about me. Why do you think I know all this shit, Scott? Why do you think I know you guys cut trades early and you hold on losers too long? You try to trade with a tight stop loss because you want a high RR trade and shit. Why do you think I know that shit? Because I done it too. I've gone through all that stuff too. Simple. That's why I talk like that. To reach directly to the person that's listening. There's a lot of people that don't even type into the chat. There's like 71 viewers. There's probably more viewers than that if I'm in like your living room or your, you know, office or some shit, and there's other people watching too. So there's definitely more than 70 people. But there's only like what, 15, 20 of you active in the chat. There's still at least 50 plus other viewers that aren't, you know, engaged in the chat. And that's fine. You don't have to. But I'm speaking to them too. Right? Oh yeah, John, I definitely take some fucked up ass trades. I got to fix that. Yeah, and I'm trying to help you. I'm trying to help you. So, and Shane, I don't know if it's Shane or Shaney. I don't know. But data highs and data lows, yes, that was important, but that was only important to me during the open because we did run that 730 high here, and then we ran into that gap in the same couple of minutes. So we, for NQ specifically, we did run that high and then slam to the lows. And because that happened so fast, there was no trade for me to frame. And I didn't know if we were going to continue, let's say for London's low or whatever else. So I just left it alone, honestly. I was like, yeah, I don't fucking, whatever. But these, in case you were wondering what these were over here, that is Sunday's gap. Okay, so we did trade to the low end of that. As a matter of fact, we overshot that actually, and we did leave behind some highs up here. So we're in the middle of that. I wouldn't be surprised if this went higher, but I just didn't like NQ. And this actually brings me to a really good point with what I said earlier. When it comes to, am I going to trade ES? Am I going to trade NQ? Right? What am I going to trade? Or even like if it's between Euro and British Pound, or between AUD USD and NZD USD, or between gold and silver, whatever, when it comes to correlations, I personally trust more whatever has the cleaner target. Okay, if it's got a clean target, I want that one. Okay, and today was a good example of that. Look at this. This run here lower, okay, no problem. But this high here, that's a higher high. These highs here, that's like a 1, 2, 3 formation, which arguably that probably would have been a good short. But that's not a high probability target to me. Can it trade up there? Obviously it can. But it's just not something I trust as much versus ES that has equal highs. That to me is way cleaner. I trust that. And that's why I traded that instead of NQ. NQ still went higher. I could have looked at ES and longed NQ instead. I definitely would have made more on that trade. But that's just what I wasn't willing to do that. Okay? So hopefully that answers your question. And yeah, I do have a boot camp. Well, I do free live streams and I have free playlists on this YouTube channel. So it's not really like, I call it a course, I guess, but most of it's free. I teach most of this stuff for free. We do have a paid community. It's optional. It's cheap as shit. If you want to join, you can join. If you never want to join, then don't. I won't beg you to join. I won't beg you to stay. I have an open door policy, man. Come in, leave, don't, whatever. But I will say, we have over 200 people that are current members right now. So I ain't gonna put a gun to your head. But a lot of the times, I haven't done anything this week as far as calling trades for you. I like doing that, but I don't always do it because I do want you to learn how to do this for yourself. If you can look at a chart and point out equal highs, okay, I don't need to do that for you. Now, you probably trust it more. Oh, John pointed it out. It must be going there. No, I get it wrong sometimes too. Okay. But there are a lot of instances where I'll say, hey, we left behind these highs, or, you know, look at this, look at that, or whatever, to kind of help guide you a little bit. But I don't promise signals. I don't promise trades. Okay. I don't promise any of those things. I just do that as extra to help you in your development as a trader. Make sense? Can you please explain the breakaway gap? It's a breakaway imbalance, in my opinion. Well, I guess it depends whether you have a gap or an imbalance. So this rule may not be, I don't know what fucking word I'm looking for. When you have a reversal, okay, usually the first imbalance created in a reversal is going to be a breakaway. Now, you don't really have that here because it does trade into it. But the breakaway imbalance means, to me, again, all of this is just my opinion, a breakaway imbalance means we shouldn't trade back into it. And if we do, we definitely shouldn't trade to the low end of it. If that makes sense. Okay. Typically, the first imbalance in a reversal, and if the 1 minute's kind of shady, then go to the 2. Right? Like, oh, this is a much better. That 1 minute was kind of chopped. You see this right here? You see that? And then you see this. Again, it may not be seen on the 1 minute. You may have to go to the 2. I don't have the 3 or the 4. Okay, you guys can, if you want to go there, you can. I just personally don't. But this is a really good example. We have an imbalance here. We have a candle with no pants on it. And then we have an imbalance here. We have 2. We have this one and then this one. When you have 2, what do? You trade the first one with a stop at the second one. That rule is there because the first one, the lower one in this case, should be a breakaway. It should quite literally break away. Price should not come back to it. Okay? It's a breakup, if you will. You broke up with your significant other. You said, fuck this, I'm done. And you never get back together. But you find another imbalance and you marry that one. If we can use that as an analogy, right? You break away this one, marry the next one. Simple. And thank you, Scott and Edgar. Appreciate that. Ram, I keep forgetting about the clock. I'm sorry. I'm going to set an alarm to do this later today. Matter of fact, right off stream. I'll set a timer for 10 minutes. Okay? 9. I'll set a timer. And when this goes off, I'll go find the clock. Okay? I know I keep forgetting. I'm sorry. I'm human. Okay? That's what I am. And yeah, Shane, I mean, we just started using that recently because it's always just been a candle with no wick. It's like, oh, you see that no wick candle? Oh, this no wick candle. Look, if it has no bottom wick, it ain't got no pants on. If it doesn't have a higher wick, it ain't got a shirt on. I mean, it's just simple and easy, right? Learning this type of stuff, there's a lot of stuff, bro. Right? We talk about sell programs and buy programs and mitigation and inversions and this, that, and the third and all this shit. As an educator, bro, I try to give people simplicity, even though it is complex, right? Like, you cannot hide the complexity. There's a lot of work that's required. I try to give you shortcuts. Right? I try to give you expedition. There is a lot to it. But I try to make things fun. Okay? The Y slime model, for example. Your stop loss is my entry. You know, that went viral like the first 2 times I said that on Twitter. You know, and I shared my hoodie and everything, and a bunch of people found it and shared it. You know, because it's just fun and it's an easy way to remember things. Right? I don't know if you guys remember PEMDAS in school. Please excuse my dear Aunt Sally. right? Parentheses, exponents, and whatever the fuck. Simple. So that's why I try and do that. But anyway, that's the last thing I got for you. I'm going to cut the stream here because now, it's been an hour and you guys got a lot of stuff today. We had TP early on in the stream today. I won't do that every day. I don't trade every day, but I do set alerts all the time. Those go off a lot on stream as well. But if there was one alert I would do for today, it would be 6302. Now, if I'm wrong, I don't think I will be, but if I am, there's a very small portion, I guess, of opportunity or probability that we could run those lows. I don't think we're going to do that. Okay. I think we're going to leave that open, and I think we're going to trade up here. But again, in the event that I'm wrong, if it decides to trade lower and start to run for a different level of liquidity, it could trade below those lows. But probabilities to me are higher than lower. Okay? But that's what I'm going to leave you with. I don't know who Tyler Blevins is, or Belvins. I don't know who that is. Is he a comedian or a pastor or... Oh, he's a ninja. What the fuck? Okay, well, whatever. I mean, I take it as a compliment. Thank you, Shane. All right, everybody else, y'all be good, be blessed. I do not stream on Thursdays. I do put out market reviews on Thursdays. We'll be here same time, same place on Friday for FAFO Friday or Philosophical Friday or just regular Friday. I don't know yet. But hopefully you guys learned something. Drop a like on the stream on your way out if you have not liked it already. Yeah. So be good, and I'll see you Friday.